everyone, this is a trader investor coming to you again today. I usually don't do 3 videos, but in this video I just wanted to go over the market overall, the broader market. We had 2 gap up days in a row. Last Friday was a small gap up, but today was a very significant gap up day. So I wanted to just go over what the market structure is like and where we see some potential area of value for us to be able to take advantage of opportunities on the long side. Right now, because the market is in a very strong uptrend, looking at the monthly, all of the charts on a monthly basis are in a very strong uptrend. Even the Qs that had recently broken some trend lines are back in the upper zone. So I'm seeing some extreme bullishness. So I'm not in a hurry to enter long side at the highs. I'm also not in a hurry to enter put positions or hedging positions yet, because I'm not seeing any break of structure on a lower time frame. So when we go to weekly on each one of them, there's no break of structure there that we can see. As you can see from the Qs, they're back in a very strong bullish momentum. The horizontal area of values, that horizontal support, was very well respected, and we are continuing to make higher lows. Same thing with the IWM. There were some horizontal support areas that are respected, and we are continuing to make higher lows. And with the diamonds, we're just staying at the all-time highs. We just keep making new all-time highs. That's what we keep doing. So when we go to the daily, then let's try to find some areas of opportunity. So starting with the diamonds, I would like price to do this and this. So as it is testing this support, the trend line support, I want to see a break of structure in the hourly chart. Break of structure meaning there's a pullback. That pullback is terminated, and based on that termination, we go long. And so that's what I want to see on the hourly on the diamond. So that's an area of value where I want to be able to take some positions in, but nothing at the moment yet. And so as we look at IWM on the daily basis, this one in particular, I want to wait a little bit more before entering a position. What I want to see is, I want to see this lows held for sure. That's those lows are held. However, I'm not seeing any significant new higher high. So you can say price is doing this and making new higher highs, but I would like to see a little bit of a pullback to continue, or it could be that we continue to drive up a little bit, then we have a short pullback and continue. So these are some of the things I want to see in the IWM, because IWM for me, this is a very, very sideways action, a lot of sideways action. So I want to see the upper limit broken before I'm really comfortable to enter any position in the IWM. Not saying it will not make it higher. I'm just saying, for me, as an area of value for entry, I don't like chasing. So not to chase. This is where I see potential. In the Qs, now Qs, this is very good here for Qs, because what I see is, I see a low here, I see a higher low here, I see a high here, and I am seeing a higher high here in this area. So very, very good entry. So if you had not entered in this area earlier today, then you have kind of missed that opportunity. So the next area is when price does this. We enter, or price is going to pull back, and we enter. Based on how far we have come up, it will not surprise me for a market pullback in all of the indices. So not just the SPYs, but all the ETFs that follow the major indices. That's what I expect. So when as you look at the futures are showing some, short-term pullback, not anything significant, of course, but they're showing some potential pullback that we will see what the price action does overnight. Even as you see in the Russell futures, we had a down day. Even though it closed higher than Friday, we still had a down day, and that down day could continue because we are in this consolidation area. So I want to see price break out of this zone. Really, for me, I want to see price do this, test this upper limit, and go long. This is what I want to see in the Russells, in the futures, and also in the IWM. Same story. That's what I want to see. So all of them are bullish for now, except for IWM in a range bound. So I'm not too excited to enter any positions. The SPY is the strongest with the diamonds all making all-time highs. So I want to see some potential retracement. So in the SPYs, what I see here as a potential support and resistance area, looking at the Friday's high and low, the Friday low coincides with March 16th, March 17th as resistance. Friday's low becomes a good support, and also Friday's high, because we had a very big gap up, I can expect price to be able to take a breather. Breathers are healthy. They just give us opportunities to enter. So don't look at your long-term accounts, your IRA accounts, when markets are taking a breather, because that's just a normal part of trading, and your long-term account is for long-term anyway, so not for the day-to-day movement. When you're looking at a chart of on a daily basis, stocks will do this. It's normal, they'll do this. But when you turn this into a monthly view or a yearly view, this is what price is doing. Because this is all absorbed, and all you care about is price has started here and price has ended here. That's what you care about when you're looking at a long-term view. But when you're looking at it on a daily basis, you see all this fluctuation, you see all this volatility, but this volatility doesn't really matter. What matters is for you long-term is where you start and where you end. So it is important when you're looking at these pullbacks to consider them a healthy part of the market that gives us opportunities to enter, that lets the market breathe. Instead of just climbing straight up, the market just takes a breather, finds a plateau, or just goes down on a small hill and then continues up. Just like a runner wants to take a breather, consider it the same way. The market wants to take a breather, and that's okay. And those breathers, like I said, give us buying opportunities, and that's what we're looking for. So this market could very well do this and do this, and this area of value that I have drawn here as our support, that's where I expect the markets to come down to. So it's really not surprising if the markets were to come down to this area over the next couple of days, before we resume the uptrend. That's not really surprising. So this is what I see as a structure, as an area of value for the overall market. I don't need to go to the hourly, as I've said last week, because we're not near an area of value. So where we are near an area of value, this is where this is important to look at the monthly, or the hourly, sorry, the hourly. So the price will go down, price will terminate that pullback, it will make a smaller pullback and resume. So when we have a new higher high, this is where we know that the pullback is terminated. And I'll put a video up here at the end of this video to show you the pullback termination strategies that I use. So this is how we know a pullback is over. We have a pullback on the hourly. When the hourly starts to make higher lows and higher highs, this is where we will take advantage of them. So when we see this and then the high is broken, we can safely enter for that continuation. That's how we know the pullback is terminated. That's how we take advantage of it. But until we are near an area of value, meaning is that we are at the horizontal support and resistance, or we are at the long-term trend line, and in the case of SPY, we have this monthly trend line that is very, very far away from us. So until we reach there, looking at the hourly does not really make sense. What we will do is monitor this on a nightly basis. So for those traders who only want to look at charts once a day, then you're done at the daily until you have an opportunity to look at the hourly for more precise entry. And if you are looking for swing trades, day trades, then there are a couple of strategies that I have shared. Take a look at those videos, because I have shared a lot of strategies that will capture movements, but not by looking at charts all day long, but by looking at charts in a very smart way at predefined moments. So take a look at those. So let me just wrap this up. So the market is very, very extended. Extended does not mean go and buy all the puts you can, go and hedge. That's not what it means. There is no market sentiment that's telling us we need to hedge. VVIX is low, UVXY is low, put call ratio is low, and even the 10-year bond is starting to show some weakness. It's not really weak yet, but it's starting to show some weakness on a daily basis. It's starting to consolidate. So if we start to see this making lower highs, that is again very bullish for the market. But for now, that's not what we're seeing yet. So since we're not seeing this, there is no sentiment that tells us the bull rally is over or it's about to take a breather. Therefore, do not be in a hurry to buy hedging positions or to buy puts for hedges. Just take a look at your daily charts for where we are, and then look at smaller time frame for just day trades if that's something that you want to do. So with that, I will leave you and wish you a very nice evening, and we will see each other in the morning when the markets open and we get excited for the new day. Take care, everyone.